Dear friends, thank you for supporting this channel on Patreon to join our growing family of donors, now 59 patrons strong. And remember, once we reach 100 active patrons, we will start sending out a 1-ounce U.S. Silver Eagle, autographed by your host, Dunnigan Kaiser, to one active supporter each and every month. Thanks for taking a minute to pitch in by going to patreon.com/ReluctantPreppers and pledging your support today. Thanks very much.
Hey Reluctant Preppers, this is showing you just how easy it is to purchase silver without paying any premium over spot price. You just go to sdbullion.com/RP, scroll down and enter the special code to get silver without any premium, and they'll mail it to your mailbox, discreetly packaged. Inside you'll find a beautiful 10-ounce bar of fine silver, and you are able to purchase that and have it and add it to your stack and your collection without paying any premium, and you're supporting Reluctant Preppers along the way. Thanks.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Hey Reluctant Preppers, today's date is Wednesday, April 25th, 2018. We're here with Gregory Mannarino of TradersChoice.net. He provides cost-free expert advice on stock trading and insight into the bond markets and economic situations. And he's here with us on Reluctant Preppers to talk to us about how we can reduce our exposure to systemic risks from the debt and the bond market and other nasty areas, at the same time not being stuck out of the action and being able to pull cash out of the market and to increase our solid asset stockpiles. Greg, thanks for joining us here again on Reluctant Preppers.
Great to be back. Thanks for having me.
And this is a first, is that it's the first time that we've been able to do a video recording. Our guests have been asking for that, and they've been really grateful for that when they've been able to start doing that with other guests. I appreciate it. You've been willing to allow us that opportunity today.
No problem. I'm not sure who wants to see this face here, but okay.
Yeah, it helps people to relate to the information that they're getting, to know the person, that kind of thing. I know it was great for me to be able to meet you in person at the Liberty Mastermind Symposium in Las Vegas, where you live, and we were able to connect there and to establish and keep that relationship going since then. So thanks again. And I've been following your blog posts. Just for people who might not know, Greg posts multiple times per day a market commentary on his TradersChoice.net website, and always giving us your insight into what's currently going on and what you think may be happening next in the market, and giving people kind of day by day and week by week coaching on your perspectives on what's really going on. Maybe we could start there, and you could just kind of give us, for people who haven't been following your every published word, if you could kind of give us, in a nutshell, what the main themes are that you're watching unfold right now in the major markets, and what you believe about where we're headed in general. What are the major forces that are driving this market?
Sure. Well, it kind of goes back to what I've been saying for quite a long time, and we're starting to see it happen. We're really starting to. That is this action in the bond market here. The yield curve is tremendous. I'm referring to the spread between, let's say, the 10-year and the 30-year bond. It is getting, every week, it seems like it's getting more narrow. This is pushing the yield curve flatter. I believe we are going to get an inversion, something I've been talking about for an extremely long period of time. I can't imagine how the Fed can prevent that from happening. We've seen this before. As a matter of fact, we've been here before. 2 other times in recent history. 2008, we had stock market valuations about where they are now with the flattening yield curve. Time before that was the .com bubble, same kind of a situation. It's much worse now because of the whole debt issue. But we're seeing a lot of similarities, which should tell all of us that something is brewing here. We're in an environment now where rates are rising, and this is putting pressure on the stock market. It's been very, very volatile lately. I think we're going to get more volatility here. In fact, I'm sure of it. We've had a decade of no volatility,
right?
And we're starting to see that again here. And the market is going to do one or two things, in my opinion. One, it's going to And this is the one that I don't think is going to happen, but it's going to try. The market is trying, at least now, to reprice in a rising bond market and this flattening yield curve as well. If you notice, if people are paying any attention at all, we've been getting pretty good earnings coming in. As a matter of fact, stellar. Meanwhile, stocks are selling off. So, if you were to listen to the mainstream financial channels, the ones they call the Confederacy of Dunces, they're going to try to convince people that the market is driven by earnings. And obviously that's not true, because if it were, stocks would be markedly higher than they are right now. It's the action that's occurring in the bond market, both with the yield curve and with the rates rising. Now, people get crazy when I say that. Oh, Greg, rates are really still low. Yeah, they are low. It's not the actual number we're looking at. It's the pace. It's how fast bonds are selling off. And something about bonds that sell off, rates rise to compensate, to make them more attractive. So, in other words, to try to get people to, not sell them. But that's not what's happening here. So we have a couple of dynamics in play. Now, I want people to keep this in mind. Even if we get an inversion, which I think is coming down the pike, I don't think we're too far off. That doesn't mean that the day that, let's say, for example, one of your readers happens to just look at the spread between the 10 and the 30 and says, oh my goodness, the 30 is yielding less than the 10. We would have an inversion. That doesn't mean that the market's going to crash that exact day. If history is any guide, the last two times this happened, there was a lag time. There was a little bit of a lag, and then we got a massive sell-off here. And I believe, because this whole thing is fake, that they're going to try to prop it up at least through the midterms. But we'll see if it holds. It's all predicated on the bond market.
In the past, you've talked to us about when people are concerned about the swelling national debt and, frankly, sovereign debts all over the world, as well as regional and municipal debts as well, and corporate borrowing and individual household borrowing. So debts is one big concern people have had, and you've talked about that for a long time. You've also talked about that people who want to reduce risk of catastrophic losses to themselves and want to know, well, when is the collapse going to happen, should keep an eye on the bond market, because you've mentioned in the past that that is going to be the clearest indication you have in advance of when these big moves are it's a leading indicator.
Absolutely is. Yes.
Do you foresee a bond crisis? Because some people we've heard interviewed and some we've had on our show have talked about that this, perhaps as early as this year and perhaps as early as this fall, all kinds of problems in not just the U.S. federal bond market, but in all kinds of debt markets coming to a crisis. Do you think that's a realistic scenario? I mean, nobody can guarantee perfectly, but is that what you're expecting to some extent this year?
This year, I don't know about this year, but there's no doubt about it. We're in crisis right now. How do we know that we're in crisis here? Because they can't do anything else except borrow more cash into existence. It cannot stop. They can't balance budgets. They're going to look for every reason to borrow cash into existence from here until this whole thing implodes. It's the backbone of the debt-based economic model. I talk to people every day. They don't get that. They don't understand that that's how the system functions. It's the only way is to continue to do this. So this issue with global debt and every capacity, unfortunately, has to keep getting worse. It can't get any better until we hit that wall. The wall's coming, and I think the bond market is telling us something here with that yield curve. It's not even really a curve anymore. We have, if you were to look at a picture of the yield curve, we have the short end of the curve, which is being pinned down artificially by the Federal Reserve, keeping the federal funds rate artificially at near zero. Right. And then it kind of goes up sharply, and then it kind of almost completely flattens out with a little bit of an uptick towards the end, towards the long end. That's where we need to watch. The yield curve is completely abnormal. Everybody knows it. The valuations in the market are in the stratosphere. Everybody knows it. Well, they won't tell you on the mainstream channels, but this is the truth. And again, we've been here before. This is just a repeat scenario, and it's going to repeat again, although this time when we get a meltdown, and it's coming, I can't imagine how they can recover because we've borrowed everything that we can. The issue is debt. The reinflating of the global debt issue, which we're speaking about now, has pulled up artificially global stock markets. Think about it this way. With world central banks doing what they're doing, you can't go anywhere else. They've deliberately created an environment of risk to reinflate a stock market bubble, to reinflate a housing bubble. And this has caused distortions to occur across the entire spectrum of asset classes, some of which are being artificially suppressed, and you're well aware of that. But there's an issue of debt coming down the pike here that I don't think people understand how bad it has the potential to be. And in my view, we're literally marching into a worst case scenario because it can't get any better. They can't do anything. They can't fix it. They can't pay down the debt. They have to keep borrowing just to sustain where we are. And all of this is going to come down to a resource problem at one point. That's what we're doing. We're borrowing things so we can acquire resources to sustain where we are. When we can no longer do that, we can no longer sustain our environment. And that's why I always say this is the global debt and the human bubble. The debt is inflated, unfortunately, in many, many ways, a population boom, which we will not be able to support in an environment in a worst case scenario. So we have the potential to see a massive loss of life on a global scale when this whole thing normalizes. That's my view.
At the risk of being too elementary, I did want to make sure that we're all really clear when you're talking about the flattening yield curve and what that has to do with kind of creating an abnormal or indicating kind of a tipping point situation. So in a normal, healthy environment, would you see that short-term bonds would come with a certain interest rate, and you should be able to, by tying up your money longer and basically being willing to subscribe for a risk for a longer period, you should get rewarded by that by higher returns on that. And when
that's a normal curve.
Okay, but
we don't have that now.
Okay, so when the long-term yields come down to where there's no more reward being offered to those who are willing to commit and tie up and hold risk for a longer period of time, when that's happened in the past, you're saying it's been the early warning signs of a coming recession or coming collapse.
Absolutely. If history is any guide, that's what it's telling us. There's no doubt about it. And that's another reason why the stock market is doing what it's doing here. I think it's very possible that we're seeing peak earnings because down the pike, according to that yield curve, things are going to slow down. So despite the fact that we're getting all these companies that are reporting really good earnings.
Okay, so these are the good old days that we're in. Huh?
Yeah.
And so with the coming recessionary pressures, then that'll hit corporate earnings. I know we heard Danielle DiMartino Booth talking about how many companies, especially in the U.S., hotel chains, restaurant chains, retail, big-time retail, and other commercial are shuttering significant portions of their stores and that kind of things, and that the coming glut of unoccupied commercial real estate will likely be one of the likely potential sources of a real disruptive pressure on the market. I know in the past you've talked about, what I'm trying to build up to is a question of, you say people don't realize that you just can't keep on exponentially debting your way through prosperity. But some people, that's all they've known in recent decades. So why can't that just continue in perpetuity? What's actually going to be the kind of things that would say that reality will assert itself because of this or because of that? Why can't you just keep borrowing your way into perpetuity like that?
Well, number one is that we have to pay interest on all that borrowed cash. Number two, as the more cash that they print out of thin air or add to a digital screen has to get its value from somewhere. This is where I think a lot of people get confused. When a central bank prints cash out of thin air or adds it to a digital screen, which is more than what they do. They don't even print this stuff anymore. As a matter of fact, what I want people to do is go to the Federal Reserve's own website and look at how much actual cash is in existence. It's about $1.5 trillion. That's it. The rest of it exists in digital form. It's not on the elemental chart. It doesn't even really exist. But the fact of the matter is that every single time another bill in any form is introduced into circulation, it has to get value from somewhere. It steals a fraction of a fraction of a fraction of value from every single other existing bill in any form. So we dilute the currency. So we end up in a massively inflationary cycle. And this is going to happen too. I mean, another basic concept that I want people to understand is we have all of these extra bills in any form you want to talk about, digital or printed, that's being, it's exploded to the upside since 2000. But we have essentially the same amount of goods. So at one time, we're going to get all of these extra bills in any form chasing the same amount of goods. What does that mean? Massive amounts of inflation. So there's a trade-off here. Yeah, they can continue to borrow and create an environment of risk, but what that does is cause distortions like we've seen all over the place here. Nothing, and I mean this, nothing right now has a real value based on normal market forces. The job of these markets has been taken away. The only job of these markets is to determine fair value. When you have central banks that have done what they've done now for an entire decade, taking the largest part of this market, which is the debt market, artificially suppressing interest rates, where everything gets priced over what's happening in the debt market.
Okay.
So if that's fake,
yeah,
how can the price of anything be real? It's true.
In this upside down, unreal environment that we've been living through for at least the past since 2008, what can an ordinary person who does not want to basically drink that Kool-Aid, a person who wants to make sure that they are not unreasonably subject to the risk that imposes, how can they still benefit or prosper from during this time while still really limiting their risk exposure to the potential of a catastrophic collapse? I mean, one of your taglines is "rip the face off the market." So what does that mean to you? And they call you the Robin Hood of Wall Street. What does that mean to you?
Well, what I do is I use the market as a weapon against the powers that be that are trying to weaponize it against us. That's how I look at it. Sure, if they want to play their game, I'm going to play mine. I'm going to take my profits out of there. I'm going to convert that into hard assets, other things. So, look, there's a ton of money to be made in this market. There's no doubt about it. In fact, it's stupid, the amount of cash that can be made and lost. But if you play this game right, you will come out ahead. Takes a lot of work, takes a lot of dedication. I work 100 hours a week for me is like nothing. That's what I do. I'm usually probably 120, 130 hours a week on this. This is what I do. But, if you don't want to get involved in the market, because again, it takes an overwhelming amount of not just work and time, but an understanding of how the whole thing works to do what I do. It's really the truth. But barring that, I still believe that the best places to be are in hard assets. Silver is still and will remain my ultimate favorite asset. I think it's still the most undervalued asset in the history of the world, and it's has the potential to grow exponentially in value based in fiat currency. Just same for gold. I like silver better, but that's really my thing here. Like, no one should be overly massively invested in any one thing. I think you need to be diversified. I have a collection of vintage guitars, for example, other things too, old weapons I like to hold, all kinds of things. You got to be in things. I mean, that's really the difference between people. Most people's existence is kind of sad in a way. They borrow and they rent their way through life. They don't own things. Owning things is what builds wealth. Truly, I mean, other than obviously our health. And I mean, that comes first before anything else. All of this, in the grand scheme of things, won't matter at all at one particular time. There's no doubt about it. And what I wish people would do is ponder that, and that there are a lot more important things than just money or cash or where it's moving or these freaking markets that we're involved in. I want people to understand, and this has been my premise also since day one, and I think that is we're all responsible for each other. I am my brother's keeper. So I feel that if we adopt that kind of an attitude now, no matter what comes down the pike, whether it's good or bad, we're all going to come out better in the end.
So if people want to participate in the insights that you share, just give people, you mentioned your own extreme work ethic and how much of your life you pour towards that. And a lot of that you're giving to people. You're you're not just doing it for yourself and keeping it to yourself. I mean, you could do exactly what you said and then not tell anybody about it. You'd save some time, by the way. It'd save some of your time, and you wouldn't have to worry about taking negative feedback from people who weren't happy or whatever. But you do it anyway. You go past that. You put out the extra time and effort, and you read people's responses, and you write back, and you talk about it. And so, what drives you in that sense of because I think you're a living testimony to that. What you just talked about is reaching out and being there to help others. So what, I guess, if you could just give us 1 quick minute on what drives you in that regards, because you're putting a lot of your life energy towards helping others for free. So, why does Greg do that?
You know what? It goes back to what I say. I really do feel a responsibility to do that. I don't want people to. What started me doing this entire thing was the last market crash, and I lost money. Friends of mine got wiped out. People were suffering. People got thrown out into the street, and I got sick of it. I said, you know what? Look, let's try to change this a little bit. I wish I knew now what I knew then. There's no doubt about it. I've grown a lot since that time, but I don't want to see this happen to anyone. I really don't. I want people to understand that they don't have to sit back and let the system eat them alive. If they want to, they can use the system to their own benefit. So yeah, I do put things out here. I say, maybe you want to get involved in this, and maybe you want to look at that here. I got a whole bunch of free stuff on my website. I just put an incredible charting system up there. Anyone can use it. No signups, no sign-ins, no nothing. Just put in a ticker and analyze it. Have a look at it. I set up a chat room for people. I want people to get involved with each other. I want people to, again, understand that we're responsible for each other. And that's, I think, something that's been stripped out of society today. We'll get locked into our little worlds, not realizing that, there's some nice people around you. Get to know who they are. It's not just about, that's what they want us to believe, the corporatists. They want to put us in a box and leave us there and make us feel like, I don't know, almost like we're robots, but we're really not. We're human beings and we're social creatures, and we need to understand that and use that to our advantage. Because again, one day, none of this is going to matter at all, because you won't be breathing, you won't be laughing, you won't be smiling, you won't be nothing. So in the meantime, enjoy the life you have and try to do good. Find something each day that you feel that would benefit somebody else in some way. And I guarantee you, it will come back to you tenfold. Right. It's really the truth. I believe that. I really do. I think part of why I am a successful person is because I do pay it forward, because I do give back. I feel responsible to do that. And by doing that, I get rewarded. And I get to meet people from all over the world.
Yeah, that's right.
It's an amazing, it's just crazy. And I love it. I really do.
That's a part of the wealth of your life is those relationships and knowing in your heart that you really are helping all these people who you're reaching out to.
At least trying. Yeah. At least trying. And that's the most important thing. Try to do one thing nice per day. Just one. How about one thing nice per week for someone else that you don't know? I don't know. If you think one of your neighbors down the block looks like they might be in trouble financially, take a $5 bill, throw it in their mailbox. Don't write who it's from. Just put it in there. And, they'll pick it up in the morning and say, wow, look at this. And they'll feel good about it. And you'll feel good about that too. I mean, just something stupid like that could make a big difference in people's lives. There's no doubt about it.
Back to a question I never finished asking from a practical standpoint. For people who maybe have a full-time job, that kind of thing, but still want to benefit from your insights, what's a realistic amount of investment of their time? If they're not going to do the 100 to 110 hours a week, how much of time is it realistic to just keep an eye on things, to be responsible and to participate in some of the strategies that you give people insight into?
Yeah, well, number one, let me just say this is true. It takes a certain amount of lunacy to do what I do. It really does. But it just goes back to my core, what I've been saying for years. Bet against the debt, become your own central bank, acquire hard assets, own things. Try to keep out of fiat currency as much as humanly possible, because they're going to kill it. They have no alternative. They have to keep printing. They have to keep borrowing. It can't stop. They'll do whatever they have to do, create wars, create situations that requires them to borrow cash, have unbelievable budgets that seem to come out of left field, that make no sense to anyone, because they have to keep borrowing cash. Can't stop. Once we admit that we can't borrow anymore, we get a debt crisis. And that's what we're in now, unfortunately, is because they feel that we have not maxed out our credit card, and it's coming. And it's an unfortunate thing.
Does it make any sense that people who want to at least start dipping their toe in the water of trying out taking some action steps based on some of the insights that you share on traderschoice.net, if they put whatever, I'm just going to pick a number, an hour a day or 2 hours a day towards following that stuff, is that realistic that they can make progress in understanding and get some benefits from that as they follow your guidelines and that sort of thing that you recommend?
Sure, absolutely you could. You don't have to work like I put in so many hours because I have a lot of people that follow my work, so I want to try to be right. But most of the times, look, I get it wrong, no doubt about it. You can't be right here. But I think realistically, if someone would have put in, you're going to have to put in some time here, but if someone would have put in maybe 10 hours a week where they really sit there and try to understand these markets, instead of sitting there watching TV and wasting your brain cells on garbage, learn something. Learn how to read a chart. Learn what these things mean. It's not that hard. It really isn't. And it'll kind of come to you after once you look at a chart, let's say a long period of time. Let's say you're looking at ticker SPY. I got this back here. If you would just follow the chart on my website, which I have, it's free, like I said, and just look at those patterns a few hours a day, you'll start to understand, hold on a second, this looks like this is going to turn around. This looks like this may make a difference. I mean, I was telling people over the last several days that the chart on my website was a sell signal with SPY several days ago. And, this was like 3 days before we had the big loss yesterday. It was right freaking there. So people, that's what I'm talking about. You can learn to recognize these things and then take action on it. So it's not that hard. Yeah, but like I said, instead of watching some nonsensical show which is only going to benefit somebody else, benefit yourself. And then once you do, take $5 and go throw it in your neighbor's mailbox that you think may need some help or something. Something along those lines. It's so important.
Well, that's good advice, Greg. And we've been talking with Gregory Mannarino. He is the head and founder and host of traderschoice.net, a wonderful free resource of trading information, insight, and community networking that's available on your web channel. I know you're also available on Steemit and other outlets as well. So, Greg, thanks so much always for joining us here on Reluctant Preppers.
Great to be back. Thanks for having me.